Hey everyone, welcome back to Corporate Decoder, the place where we decode those boring corporate filings to find the juicy bits. Today, we're diving into the Federal Home Loan Bank of Des Moines' latest report, and let me tell you, it is all about where their money is coming from and where it is going. Now, what is this report really telling us? It is a way for companies to quickly inform the public about big things happening that could be important to investors. Think major events, new deals, or in this case, how they are raising money. The Federal Home Loan Bank of Des Moines, or FHLB Des Moines, as we'll sometimes call it, gets most of its money by selling debt. Kind of like issuing bonds called consolidated obligations. This whole system is overseen by a government agency, the HFA Federal Housing Finance Agency. And here is a key point you need to understand. These consolidated obligations, the money they borrow, are backed by all 11 of the federal home loan banks together. This means if one bank has trouble paying, any of the other 10 could be asked to step in. It is a shared responsibility, but importantly, the United States government does not guarantee this debt. So it's backed by the bank's own financial strength, not a government promise. Now, the really detailed part of this filing lists out specific loans or bonds they are planning to issue. They call it Schedule A. This schedule shows what they've committed to borrow, but with a few important exceptions. They don't list the short-term borrowings, the ones that mature in a year or less, because those are considered just everyday business operations. Also, if they take over the main responsibility for a loan that another federal home loan bank was originally on the hook for, and that loan has more than a year left to go, that will show up here too. They also make it super clear that while all this borrowing is important to them as a whole, they aren't necessarily saying any single loan in Schedule A is a huge deal on its own. It's like saying the whole grocery bill is big, but not that the price of milk specifically is a game changer. And this part is really interesting. Schedule A doesn't tell you about any fancy financial tools they might use like interest rate swaps. These are things they might do to manage the risk of interest rates going up or down. So you are not seeing the full picture of their financial juggling just from this list. Here is another crucial point they are making. You can't use this Schedule A to figure out exactly how much debt they have overall. Why? Because, like I mentioned, they leave out the short-term debt. Plus, it doesn't show if the money they raise from these new loans is just being used to pay off old loans that are maturing. So, it's not a direct snapshot of their total debt growth or reduction. That kind of information, the big picture of what they owe, will be in their regular reports to the Securities and Exchange Commission. And lastly, the amounts you see on Schedule A are what they call at par. Think of it as the face value of the loan, but when they report their official financial statements, those numbers might be different. That is because the official statements take into account things like discounts or premiums they might have paid or received when they first sold the debt. So, the face value isn't always the exact accounting value. So essentially, this filing is a signal. It's telling us about the borrowing activities. The Federal Home Loan Bank of Des Moines is actively in the capital markets raising funds through issuing debt. It's a core part of their business model, but one that comes with shared risk and isn't directly government-backed. Now, let's look at the bigger picture. Federal home loan banks are critical for providing liquidity to their member financial institutions, helping them fund mortgages and other loans. So when they issue a lot of debt, it means they are actively supporting their members. The fact that they are detailing these issuances, even with the caveats, suggests a busy period of funding for the bank. They are raising capital likely to meet the ongoing needs of their customers, which are the banks and credit unions that are their members. We're not seeing any red flags or sudden emergencies here, just the regular, albeit important, functioning of a financial institution that plays a key role in the housing finance system. It's a steady drumbeat of their operations, ensuring to raise money flowing. Alright, that is our breakdown of the Federal Home Loan Bank of Des Moines' latest filing. What is your take on how these institutions manage their funding and the risks involved? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate documents. Don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you in the next decoding session.